Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Okay, well, hold on. My sound is a little messed up again. Just a second. Just a second. Let's make sure we got this all sorted out. Okay, that's good. Oh, and we're gonna get pull up. Let's make sure you guys got some background music here for us today. Man, this is the second day in a row we've been doing this too, huh? There we go. Let's fix the camera here. There, that's better. All right, guys. Hey, it's Tuesday. I don't think we have anything too huge. I think we got some housing numbers today. It sounds like the markets are kind of undoing a little bit of the market action that they did yesterday. But let's come into the charts here. Ooh, I like that soundscape there. Let's see what they've been doing. So here in the treasuries, they did a really good push up yesterday, but that is being undone in the overnight action, and on the open here it does look like they're pushing down. S&P 500, pretty good day yesterday and sitting up at 4,300. So again, I'm really skeptical of their ability to stay above 4,300, or rather go much beyond it before options expiration this Friday. So we'll see where that goes. Oil being pressured, bouncing here a little bit on reports that maybe the Iran deal is not going to happen. It sounds like some last minute hiccups over on that, and I believe that's why oil is coming back here. Over in gold and silver, they got pressured pretty hard on that technical move, but they are kind of coming into some of their moving average supports and so forth and holding for now. So see, copper got hammered pretty hard yesterday, but it does appear to be on the comeback. And then over here we got Bitcoin still just going sideways and not doing much. I have to say, for all of the excitement and the buzz that I'm hearing around Bitcoin, and especially Ethereum, I mean, Ethereum has come back, but it's not really doing a whole lot this week. You could hear the intro music, really. I couldn't, on my side, I couldn't even hear the intro music, and I couldn't figure out what was going on. So let me fix that. And then dollar here moving up, still looking really strong past few days, I have to say. 106 right now, 106.64. It's pretty strong. Let's zoom. That's all zoomed out. There hasn't actually been that much action in the overnight. So yeah, I'm not quite, that's not the first time you guys have told me that the music sounded overdriven, but I don't know what I do about it. I think that I have this stinger transition in here, and I don't know what you do with the here. Let's see here. Maybe I need to turn monitor off to try that. As long as it's there at the beginning, because it's got the whole disclaimer and everything on it. I want to make sure that that plays. Well, it looks to me like our choices are sit back and do nothing, or go long interest rates. Well, 2.83 doesn't sound too terrible. You kind of wonder. So let's see here. I forgot. I need to come over here. Make sure my news squawk is going. Okay, so we do get Canadian CPI here in about 3 minutes, and the U.S. housing starts number. So I don't think I want to take a position before that, right? And do we have anything? Lots of Canadian numbers today, actually. Oh, and we do get industrial capacity at 715. That's not typically a huge number, but it's like the best they got today, so I think we will have to pay attention to that. Let's come over to Zero Hedge and read some headlines here. Futures reverse early losses as Walmart beats Sparks relief buying. Oh man, yeah, Walmart and Target getting hammered. That was some of the worst of the downturn. So a Walmart beat would be very good news indeed. U.S. hails overnight test of Minuteman III ballistic missile after delay over China tensions. That's interesting. They waited that long? First dog infected with monkeypox after sharing bed with couple. Okay, you know what? I just don't even want it. If it's like the dogs start spreading, I'm a little concerned. I saw this coming in to the last pandemic when they were like, what happens if the dogs are carriers? We could have something where we have to mass kill our dogs or something. Please no. Please no. Not the dogs. Yes. Oh man. Why did I open up Facebook? That's weird. Okay, that's weird stuff. Dude, focus. Focus. We got news. 1 minute. So on a light news day like today, I'm usually not going to expect much, but sometimes maybe like 20% of the time you end up getting a really big move on a day like this. And the way that the Treasury has been moving overnight and what it's been doing here this morning on the open does kind of have me a little suspicious. I'd have to say the liquidity, the liquidity has pulled for this housing starts and Canadian CPI numbers. So I think we might get a decent little flash here off of this news. Okay. So the housing starts building permits number was 1.67 versus an expected 1.64. So a little better than expected, but nothing significant. And let's see here, the Canadian CPI month over month, it was spot 4. So a tad hot, but not terrible. U.S. building permits change month over month, -1 spot 3 versus an expected -3 spot 3. Yeah. Oh, housing starts 1.446 versus 1.528. Okay, so a little bit more building permits than expected, but housing starts a little bit less than expected. I think that is pretty much like what we should expect. I don't think that was like too big of a change from what the median expectation was. So I don't think I get a trade just off of that. So now we return back to our interest rates set to rise here. We could just go long interest rates now that the event is over, right? Well, a little bit of an iceberg at 16.5. And a little fighting there. Look at that. The micros really, they just gobbled all that up right there. and a large offer at 16. 16 you usually see some shenanigans, so I don't know we should read too much into that. Man, I was thinking 8-3. A little late for that one. I was getting ready to click it, but it just went too fast. So I am a little worried about, well, it's not, they're not stopping though. Like, that's the thing. They're not stopping at all. Because I'm kind of thinking, well, I don't like that right there. No. See, these prices where they kind of just gobbled them up, the offers and everything looked a lot lighter. Wow, look at that. Now, oil seems to be moving here. Oil is on the turn down, but the whole treasury complex is just getting hammered. That whole set of volume, I mean, obviously, the liquidity is light, okay? But it is kind of as I was worried it was. I wish I was faster on the trigger there, because I'm a little bit worried if I got in here above 8.4 that it will slide back on me a bit. So we're kind of in that situation where, you know, you just get stuck in the hole, like the easy trade is already passed. I really wish that I had been a little bit faster on the draw there and taken 2.83. But let's kind of let it sort it out. That was a little bit of an impulsive move, so it probably will retrace a little bit. There you go. That's exactly what I was worried about, right? But it wouldn't be crazy. It wouldn't be completely crazy for them to just completely retrace that thing, right? I think that the larger overall look is that rates are going to continue to rise. I think that the 10-year can get back to 3%, but okay, well, there are still some people there in the micros that hitting it. That was a very, very brief pullback. There was some very significant iceberging at 13 though, so the issue that we have, even if we want to continue with the downturn, that could be, well, and especially if you're going to do that, stop. So when you get that much liquidity eaten up impulsively like that, it does not tend to result in further trend. So I'm a little, the liquidity conditions are not good for a continuation trade right here for me. Feeling a little frustrated, but now I definitely need to be like, no clicking, Seth, no clicking. By the way, are we? Oh,
Derivatives trading involves substantial risk of loss and is not suitable for all investors.
Now you have to watch the
Past
intro.
performance is not necessarily indicative of future results.
So stressful.
I don't know if you actually hear
The world's on
coming
fire.
through here.
Good God.
I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong?
Come back tomorrow and I'll lose it all. Should be fun.
I wanted to adjust things a little bit. There we go. That's what that was all about. And so it is as I suspected, back to 283. So what happened here? So first of all, there was like a 5K iceberg at 13, right? And then beyond that, you got like there was like 1,000 to 2,000 traded there and everything. So like a lot of liquidity got eaten up really, really quickly. And when that happens, it's going to leave a really big hole here behind them. And so it was very, very easy for them to slide back to 13. So I don't know if you get much. Let's say it's 13 with 2 ticks on each side like that. Right. So that might make it, you know, I don't know if we'll get above 14. So maybe 2.84 is the best that we get if we wanted to continue to go short, but the liquidity conditions are not very good. We'll see how desperate they are to move it. I mean, if this is really is a truly, if they continue through and start making new lows again, then this is a really strong trend. But and note some of the liquidity around here, very, very light. So a strong impulse of market orders in either direction could move us. But especially after so much trend and aggressive orders like that, it doesn't make this location or timing very good for a trade. It's probably better for me to wait until around 9:15 or so Eastern time. Let's see if they turn. But it looks like, you know, we could have made at least $15 off of that. It's actually, you know what, we've been spoiled lately, because to see that amount of trend come through and it only be worth $10-15 is a little bit like, oh, that's it? That's it? Oh my gosh, why are you reminding me of this? Okay, so yesterday I got in a Twitter conversation in this, and I was like, well, our ability to see what's going on here is really small. And then he was like, this person responded and was like, well, I marvel at how complex this all seems to be for everyone. The Fed is going to act different from its behavior 30 years ago, but we're definitely in a recession, yada, yada, yada. And I'm like, oh, so you're another one of those delusional people that think they know what's going on. Gotcha. Gotcha. I didn't respond to him. Kind of frustrated me, though. You know what else frustrated me? Oh my gosh, guys, you got to help me out here. You got to help me out. I mean, the liquidity hole there at 13 is definitely there, but I mean, it is heavy. Like, it comes back down there to the bottom really easily. Okay, so I made this video, how to trade Federal Reserve policy. Apparently, YouTube don't like my video. Oh, that's so frustrating. What the hell? What's wrong with this video? Okay. Anyways. So, where are we? Here's the link to the video, right? And I got one comment. It was like, how to trade the Federal Reserve. And I got one comment from somebody. And they're like, there's no edge to following them. It's pure psychology. Don't spend too much time on it. I was like, oh, okay. So you missed all of these opportunities this month. And he's like, no, it's facts. It's just the amateurs listen to what they say on CNN. Like, what? CNN? Who said anything about CNN? This, you didn't watch the video, did you, TLA trader? You didn't watch the video. Why would you be saying CNN? We talked about news squawks. We talked about the Wall Street Journal. We talked about economic. Nobody said anything about CNN. What is it that you think that, like, you'd listen to the Fed? Like, I don't listen. Orders come out because of the Fed. It moves the markets. I can't. I'm so frustrated. I can't tell you how frustrating it is to me. I worked really hard on that video. For some reason, it's not going very well. Maybe people don't like the thumbnail with Jerome and the sunglasses and stuff. I don't know. What's the deal, guys? What's the deal? What you don't like it? You didn't click on it. Why? Right? But then people don't click on it, and then the one person that interacts with it is a total shithead. Why? It's why it frustrates the heck out of me. I just can't even. You know what though? There was another thing. There was a guy. Somebody messaged me and they're like, "Oh, I need more information on like monetary policy, everything I should know about links with the financial markets, etc., etc." I was like, "Oh, okay." I was kind of hoping that these videos would kind of help you with that, but I kind of see where it doesn't actually, because it doesn't give you like the okay, when Fed does this, you do this, etc., etc. So we still need to make another video, right? That's still going. It's still going. They're not going to give us a bigger pullback. That doesn't necessarily make 8.5 a good buy, but the down volume is definitely there. And by the way, oh man, this is such a perfect example, guys. You want to see why does the square root law of meta order impact matter to your your block trader? Look at this chart, okay? So we had here was the strong downtrend, right? But like, look at how much volume they sold here in the liquidity hole. Do you see that? Here, let me move it out a little bit. Do you see that? Like, here was the initial move, but then look at how much came in after it in the liquidity hole, right? The big trader is able to execute more orders in here in the end, even though it doesn't move for them. And that's the advantage for them. They create the liquidity hole. They might create the liquidity hole on purpose in some instances. So how does that help us? Well, I think that it means that there really truly is a strong meta order. Somebody was really very willing to sell a lot in here. So I think there's a very high probability that we get another leg. I still want to be careful with my picks because liquidity is light and I want to minimize adverse excursion. But I do think that we're probably going to continue moving here today, and it might actually end up being a big trade. Anyways, so if you guys go and watch that video today, make sure you leave a good comment, okay? The yen is stalling. Yeah, the yen looks a little bit more tepid about it than the treasuries are. But I also think that the dollar is reacting here. Like, dollar is getting weaker overall. So the US dollar appears to be getting weaker compared to the 6E, but stronger compared to the Japanese yen. So the chart in the yen might be a little bit different. I think that I would, in terms of like how trendy and strong this move is, I think that I would probably rather be looking at the treasuries themselves. But we'll see. There's still, I don't know about this, guys. It's kind of funny. It used to be 2,000 contracts was like your average tick. So to see 2,000 on both sides there at 10 half and 11 shouldn't be a big deal. But it really makes me weary about taking 2.85. A little. So one thing that's going through my head is this an opportunity to sell the S&P 500? Well, oh, I don't know about that one because the S&P has already dropped a good 10 points since this. Forgot to say good. Of course, you don't have to say good morning. You know what? I'm just proud that you're here bright and early today. You were late yesterday. Good job. Any of you guys catch that trend down in the treasuries? Huh? Any of you faster than me? I did not click that fast enough. Well, that 1,000 on the way back. So like, they could totally get through it, but this is the real deal, I think. This sort of trade is really hard because I know that the chances are it's gonna sweep back up to like 13. But when you get these strong trends, they'll just keep going and going and going, right? So you sit here battling with yourself. It's not a very good place. This is not a very good place. It's not stopping. I'm just gonna go with it. And then the one moment that you actually go with it, like that's when it reverses on you, right? It only takes strong conviction trades. Yeah, well, you know, I understand why it's happening now, so I think it's totally okay for me to take a trade. But it was definitely like there at the very beginning, you heard me saying like, well, most of the time it doesn't do anything. I am kind of getting hints that they're going to do something. After the news came through, they did do something. I don't know. This is a bit of a surprising trend. Even though I suspected that we could get some good downtrend today, I did not expect it to be that forceful, right? And like you can see the seller just continues to hit into them. The cumulative delta in the 10-year is actually starting to move back up, but price is still very depressed down there. So that just kind of shows you how intense the sell pressure is. Somebody had a lot to sell. It kind of, I think that really increases the chances of further legs later on. But who knows? Maybe that meant that there was enough in there for them and that they got out. It was about 10,000 contracts short. So maybe even more than that, 15,000. I think one of the things that's kind of got me a little bit FOMO-y is that when they're ticking back up, it's taking a decent amount for them to tick back up. I mean, it's getting thicker overall in this area. You see how like there's thousands here, but then you get away from it and it's a lot lighter liquidity. Like this is just a recipe for it to chop around in this area and then slide really impulsively one way or the other on another move. Well, they were threatening that 10 there, but okay. Well, some stopped out at 10. Yeah, it's just not. Now the 10-year is not, sorry, the micro yields are not responding quite as strongly to the ticks down. But you can see how even though there is some strong volume to the downside, they're struggling a little bit to hold it, right? Because there is just a little bit more liquidity down here than there is above them. At least up to maybe 13. So it's hard to keep up that amount of volume to keep selling it. They might have it though. They might have it. Some more volume trading here in the 5-year now. It's a large lot traded at 10 1/4. The 30-year has just been, it actually hasn't been that much in the 30-year. Overall though, flattening. Yeah, they're still buying it in the 5-year there. The 5-year gonna drag us back up? Is it my issue or is it real? The limit ask order at 4,300. I see 242 at 4,300. That's not too Gary. I've seen 3,000 placed out there before. Yeah, I don't really. As far back as I can see, I don't see anything too unusual past that, but. You're especially at like a round number in the equities, you're going to see a lot of volume placed there anyways, and I would be a little bit suspicious if I didn't see like 200 lots sitting there. But man, I don't. It's hard to remember back when the S&P 500 actually had liquidity. It used to be that like 50 lots was really low. Like that was news behavior where you would there. I remember times when we were closer to like 200. So, and I do remember large offers and or block trades of a few thousand in the S&P 500. So, but yeah, I wouldn't read too much into that one. Of course, it will take a little bit more volume than usual to get through 4,300, but they'll have more than enough if they get up there. Right now, the trend is to the downside, though. Okay, somebody sack a big bid at 10.5. That is suspicious as AF. Wow, okay. So I said that is suspicious AF, but then that limit order seemed to convert to a market order and 2,000 contracts traded and pushed them up 2 ticks. What's the cause? Octavius, I do not see any direct driver here. So we had the news at the bottom of the hour. We had Canadian numbers, Canadian inflation numbers, and we had U.S. housing numbers. The housing numbers, the trend doesn't look so hot. Actually, here, let me show you a chart here. Ian Shepherdson posting this little chart here showing the housing starts and just showing the trend is down. Like we have a housing shortage, but then are they building more houses? It's coming back down. Maybe it's just coming back to the median trend, but the numbers weren't good, but they were pretty much in line with expectations. So I didn't have any clear trade based off of that. But then after that happened, a large meta order came through selling in the treasury. So I think that somebody was set to sell the treasuries here today anyways, and they were just waiting for the news to get passed to do it. And when it came through, it was very, very forceful. And I was showing them earlier. Here's the thing I want you to get out of this. I was pointing this out earlier on this chart. So remember, you get a liquidity hole. So when you have a really strong impulsive move like that, it's going to form a liquidity hole. And look, like here's the initial sell right here. See that? I'll draw a line right there in cumulative delta. Okay, that was like the initial impulsive move. Look at how much volume traded after that. So basically, after the liquidity hole was formed, lots of volume into it. And this is just a really good example of why a large trader would want to use liquidity holes. because in the end they can actually execute more volume inside of the liquidity hole. But the way that this is behaving suggests to us that there is a large player out there with a lot to sell. Now, maybe they're done. It's possible they're done, and it's really difficult, especially since we didn't have like a fundamental driver to it necessarily. I mean, not like a, I mean, there might be a fundamental driver to it. They might be saying, hey, the interest rates need to rise, right? But there wasn't like some sort of news trigger or something like that, right? So that makes it really incredibly hard for us to tell if there's going to be like another leg to the meta order in like 15 to 30 minutes from here. But the forcefulness of it and the amount of volume they went through it and everything else around it suggests to me that we could see it. So I think that I will eventually take a trade, but I'm gonna wait here. So I've been playing this well so far, right? Like I said, the technicals, I don't use technical analysis. The technicals will not enter me into a trade. But the technicals can certainly keep me out of a trade, right? I can definitely see when there are situations where, yeah, it doesn't make sense to try and take a trade right there because of the liquidity conditions are as such that you're really likely to get some sort of short-term pullback. And right there from 10 to 13 in the 10-year, that is exactly what we got. So I'm proud of myself for resisting the temptation. Now the question is 284 good enough? I kind of suspect that it may actually go a little bit more than that, but let's see. Because I could see a scenario where they just kind of start to settle here at 12. Industrial prediction at 9:15, so maybe another, yeah. Like they'll wait for that number to come out, and then they'll execute the rest of it. Is what I'm thinking. That if I was the block trader, that's what I'd be thinking, right? Oh, Andre says gold. Well, gold did get hammered along with the treasuries there, but it's not too bad in gold. It's still heavy, like the market makers on the bids are not holding bids. It is so the question is, where is the point of control going to be? Is it going to stay at 11? We could see a couple more thousand trade in there, or is it going to switch to 12? Because it does look like you might end up getting a lot of volume traded at 12, right? Okay, there's 13 again. Well, they were able to they got sucked back up there really easily at 13. Bloomberg tweets, the Fed has lost control of inflation. Can it learn from its past to fix a looming U.S. recession? On Bloomberg. I have a Bloomberg digital subscription, and every time I see a story at the Wall Street Journal, I'm like, why did I get Bloomberg? I bet you it's going to be the exact opposite when I switch. When my Bloomberg subscription runs out, I'm going to switch over to the Wall Street Journal. I'm going to be like, Bloomberg was so much better. $13.5. Okay, that's interesting. So above 13, I would be concerned about maybe the liquidity being a little bit more firm above us. So far at 13.5, that's not really the case, but you're not really getting the volume. You're not really getting the market orders to push it. Nobody wants to go long here. Am I having too much of an effect? All the retail traders are watching me and they're like, yeah, I'm with Seth. I want to sell it. That was a higher high. You get access to the BUXX index if you do the Wall Street Journal. I just want to be able to read Nick's stories. That's all. Nick Timmeros is the man. How old is that guy? He looks like every time I see him, I'm like, he's like a little kid. He's not a little kid, but he looks pretty young. Nick Timmeros. We get like, does he have like a? Oh, he has a LinkedIn. Let's go add him on LinkedIn. This thing suggests that he's 44. Okay, he's a lot older than I thought. He just has a full thick head of hair. I kind of assume if you're in finance and you have hair, you must be less than 30, but I guess that's not true. Guess what 10.5 is? Oh man, I don't know. You're gonna tell me it's some important volume profile level, but I'm gonna tell you that in that particular instance, it's probably more a coincidence than anything. So it's the CPI day low. Okay, yeah, I see 10 was no 11. I have it 11. All I'm seeing is liquidity hole reversal. And it's just kind of a coincidence that the liquidity hole ended up taking it to 10.5. I guess that might have been maybe why they, instead of going just from 12, that they went all the way to 10, but you know, I don't think that we can have any information to suggest to say that well, that wouldn't surprise you if that was a session low. Well, so the pullback here is getting pretty forceful. I have to say, earlier I had it in my mind, okay, yeah, come 7:15, I think I want to take a short. Not feeling so confident about that. The volume came back quite forcefully. Now, I think in this situation, if you wanted to go long, the liquidity conditions are as such that they're still likely to come back to 13, and so you could try and build your position around 13 and go long. Like long the main treasury, it would be short over here, right? But it's not. It's a little bit different. But I think that it's it's going to be really hard for us to read or predict if there's going to be another leg or not in this situation, because the liquidity is very, very light and we don't know what he's doing. Well, here's why I think that this would be the case, Uzi. So the picture that I kind of see when you say that is a bunch of traders saying, okay, yeah, we think today we could sell today and we want our target to be 10.5, which would be the low of the CPI, and then we're going to take profits and we don't care about that anymore, and that's the trade, right? That's kind of the picture that you're painting. But here's how it actually works, or at least the traders that I watched, this is how they actually did it. So they would say country XYZ says that they want to sell 50,000 treasury futures short. Okay, so here's how far we think that we will move the market when we execute that. So this is the quote based on that we're going to give them so that we can make a profit off of it and still execute it safely. And then they draw up a plan and they say, okay, so we're going to execute it. Here's the news that we've got today, and here's when we need to have it to them by, etc., etc. So they want to execute it all today. We're going to wait until after the Canadian CPI numbers, and then we're going to come in, and they do it. They execute it. They form a liquidity hole. They dump as much volume as they can into the liquidity hole, and they're done. And then they wait for the liquidity to equalize, for the liquidity to heal. So let's just say, I mean, the best I can do is cumulative delta. So we can just say net cumulative delta, they sold 10,000 contracts. Okay. So if that was only half of the order, then they're going to come back in and sell it again in any time in the next 10 to 15 minutes. And you would see another large impulse down of selling, and that other large impulse would probably take us to a new low. Probably wouldn't be as strong of a move as the first move. Remember, the first trade is the best trade, but probably would take us to a new low. Okay, but the thing that's giving me pause here is that there was some pretty forceful trading in here. It does look like that there was an opposing meta order of some sort that has pushed us back up. And if it is equal in size to the original sell, it is totally likely, should I say likely? Totally possible that they get all the way back up to the open. So that means that, at least for me, I think that the opportunity was passed. But you get what I'm saying? Like, our mind wants to see the price level and say, well, it changed because of the price level. Well, how do you know? How can you ever possibly know? The market is obviously, well, I do think that these orders right here at 09 and 08 half, that might be the case. I don't know. This one at 10 is probably just, that always happens when there's a pivot, right? All those like orders that get left behind or something. Well, 17 here on the upside is kind of like market maker average position. So 17 would be like a complete rebalance. But like I said, it all depends on if there's another leg to the meta order. Earlier on, I remember saying, well, you know, with the way that that traded, I think there's a pretty good chance that there's going to be another leg. But I don't feel so confident about it anymore. Too much of a pushback. Look, the only way that we would be able to prove that price was anything more than a coincidence would be if we were to poll everybody that executed orders today to ask them if they used that level to trade off of, right? The reason that I hate it is because I really, at this point, I really think that I do hate it, is because I can come in here and I can say, okay, so anytime that there's a daily low here, we're going to, you know, that's where we want to buy it or whatever. I mean, what about these guys on the 11th that got creamed when it busted through that level, right? It's not effective at predicting something. I mean, it looks great in hindsight. Although one of the things that's kind of difficult, I guess you could say, is that we really don't know exactly why they sold it, right? We really don't know why they sold it. It's, you know, that meta order sell could be somebody making a bet on interest rates going back to 3%, but it could have absolutely nothing to do with the fundamentals. It could just be that, you know, China or France or whoever the heck it was just, you know, had a little bit too many bonds and needed to sell some of them. You never know. Sometimes you can know what caused the meta order, and sometimes you don't. And like, that's the issue. That's the issue at the end of the day, is that because all orders have impact and all orders can have strong impact, prices can move very far away from where fundamentals say that they should go. And technicals are a thing. And I mean, technicals do have influence in the market. I'm really skeptical about any kind of technicals that are based purely off of like a price level and like a previous day's high or low, especially. You know, I think that the liquidity hole is a much more consistent and useful technical to go off of, right? It's just that anytime there is a technical, and if it became reliable, the market starts to arbitrage it away. And it's very easy for them to arbitrage it away. That's why people use technical levels in the first place, filling the gaps. I think that people use technical levels in the first place because that's the way that the human brain works, but it doesn't necessarily provide a niche. No, this is not Windows 11. Or is it? I forget which Windows we're on. The newest one is 11, right? Yeah, I'm still on Windows 10. I'm not on 11. You know, when 11 came out, I kind of looked at it and they did a couple of things that I was like, you kind of have to hack it to bits to really make it work the way that I like to see and that I think is best for productivity. And then on top of all of that, you always get all of the growing pains and stuff. So I felt that it just wasn't worth it to. Octavia says it sucks. Yeah, I think that most of the hardcore people didn't like the way that Windows 11 philosophy, I guess you could say. So I might switch when they get a service pack and fix all that stuff. So if you're having issues with it and a piece of software, I feel sorry for you, son. I got 99 problems, but Windows 11 ain't one. I don't know. So if they beat out 17 again here, then I'm really going to be like, The thing that I find interesting about this trade, that down move, was that I do not see the key fundamental driver. So let's just come back here to zero hedge for a moment before I finish that thought. Amid surging layoffs in the real estate market, a collapse in homebuilder sentiment, soaring mortgage rates, and plunging mortgage application, it is hardly a surprise that analysts expected a drop in housing starts and permits in May. But those numbers were again destroyed as housing starts crashed 9.6% month over month and permits plunged 3.3% month over month. You know what? Reading these kind of synopsises of zero hedge, I just feel like there's so much bias in how they interpret these numbers. Usually it's always everything is so terrible, and if the numbers are good, it's like, well, eventually it's going to be bad. So like, I just coming back over here, okay, the housing starts number they expected to be 1.528, previous was 1.559, and they got 1.446. So is that really a huge miss? And here's the thing, if the miss was what's driving the market, that doesn't make any sense. So you miss and then they sell the treasuries? That doesn't make sense. It didn't really move off of the initial news. The initial news came in, they didn't really do much of anything, and then it went like maybe 2 minutes later. So I don't think that that's it, but you know, it's just coming in, seeing if there's anything else in there that I missed. Ongoing collapse in home builder sentiment. Redfin reporting that a record 63,000 potential buyers backed out of their housing contracts as the bottom falls out of the housing market. We suspect the new home inventory won't get any help anytime soon as affordability crashes to multi-decade lows. Gotcha. So anyways, the thing that I find interesting about this trade is that I cannot find like a key fundamental like trigger point per se. And yet I very much suspected that a meta order of that sort was going to come through. And I'm not quite sure why I knew that. I did know just the overnight action was to the downside. The open was to the downside. I could see that the liquidity meant that it wouldn't be very difficult to move it. But, you know, I was saying I think a meta order is going to come through, and I really don't know why I knew that. Of course, I didn't know it strongly enough to take a trade on it. I wanted to get 283. I armed things, and then by the time I had armed it and came back over, it was already at like 2.84. So I missed the trade. But the thing that I'm seeing at the moment now is it does look like in the end that we had a large meta order of equal size to buy it back up and bring us back to these prices. So that puts us in a really difficult position because we don't know why either of those orders came through, and ergo we don't know if either of those orders are going to have additional legs, right? So the issue that I have with what Uzi's saying is that Uzi's saying, you should bet long in the treasuries here, that 119.10 is going to be the low of the day. I don't think we can make that prediction. There's big players on both sides, and if one player has another leg and the other player doesn't, then the one with the other leg is could push it to a new high or a new low, right? And since we don't have any kind of fundamentals or anything that we were looking at to predict these meta orders, it's pretty hard for us to know which one is going to happen next, right? But we might be able to tag on it. We might be able to see that, oh, okay, like the liquidity has recovered. I have to, another issue is that the liquidity doesn't really look healed in this spot, right? Like at 15. It is past when if I was going to start executing more sell orders that I would have done it. But I also kind of feel like if I was the block trader selling, that I wouldn't be too concerned, right? Like it come back up. So if I had another leg, I'm super happy right now, right? And I'm just going to let it do its thing. Well, it was a lot of volume that executed down there at the bottom too, by the way. You haven't seen a driver for a continued meta order down, but you haven't seen a driver for the rally either. No, I don't think so. So what you're left with is see this. I don't think we can take a trade off of it. Unless well, let's not say we can't take a trade off of it. At this exact moment, I don't think we have a trade. We might see something a little bit further down the line that gives us a more clear picture of what's going on. Just hopefully, if that happens, it hasn't moved too much by the time we figure it out, right? Yep, if you don't understand it, why trade it? Well, so Jacob, I think that the to the downside trade makes a lot of sense just because the Federal Reserve is still talking hawkish, and it appears to me that the Federal Reserve is concerned that financial conditions are getting too easy again. You know what I mean? So that's why when we started to get the sell meta order, I wanted to be involved in it. It was too fast for me, right? And why I'm not as excited about a meta order long. So let's try taking this from a different direction, okay? The S&P 500 has been rallying past few trading days, and there is definitely a limit to how far that can go, right? Because the Federal Reserve is not going to back off interest rate increases if the S&P 500 is just on a tear, right? The higher the S&P 500 goes, the more likely the Federal Reserve is to continue raising interest rates well beyond 3%. Right now, we're pricing in 50 basis points in September, 25 basis points in November, and that would put us at 3%. But there are some people that are saying that terminal rates, well, and like Fed speakers, in fact, multiple Fed speakers saying that they anticipate that they won't be done until they get to 4%, right? And the treasuries are not pricing in that at all. But if the S&P 500 continues to just rally and rally and rally and rally, makes that 4% a lot more likely, right? So oh, okay. Just shrugging it off the significance for the sake of it being, but how actually is it significant though, Uzi? So like, there's no way that you can actually sort out a good trade off of it, right? Obviously, if you had bought down there at the bottom before, then it would have been a good trade. Okay, but like that level had been breached before too, right? So like that's where it kind of gets funny, is like how would you program that to come in and say, here's a technical level that matters? You know what I mean? Howell dreams about 3%. I mean, I think that 3% is kind of a nice, let's just get the 3% and stay there. If inflation was under control, we could hang out at 3% for a long time. I think, yeah, that would be great. you get like inflation 2% and you get real interest rates are giving you 1. Yeah, seems about right to me. Jacob thinks because the markets are calling the Fed statements bluff. I don't know about that one. Maybe that's what's happening. Sure seems like a lot of people believe that. I'll give you that much. Maybe. So like the first challenge, Uzi, that you have is that you have to express that with math. Right? Even going back to April? 9, I don't know about that. %3 is a problem for equities. Dividends won't make sense. Better off with the 10-year. That's a good theory, but how do we sort out that actually will be a problem? You're operating under the assumption that everyone has, well, okay, but since I do have the ability to program an amazing algorithm, right? We do have the ability to come in and say, you know, can we mathematically indicate that this particular price level is significant, and then test, you know, when that's okay. So like, let's take it from let me, I don't think that that's quite what I'm getting at though. So like, here's our chart, right? Okay, so you're saying that at oh, I don't even know why I have that line on there. Well, it was like a significant low that happened there, but let's just move it up here to be around this low here. Okay, so here, I don't know, you're saying that it was critical at certain points. There was a point back in September, but I don't know. Okay, but if we ignore all of this area where this was at and we moved our chart over to here, okay, now where do I draw my line? Right? So the question is, for a given chart, how do I draw the line that is supposedly going to act as support? Right? Well, I could come in and I could say it held right here, right at 125.03. Yeah. Well, I can come in here, labeled horizontal line. Okay, let's just put it like 125.10 maybe. Sure, something like that. Okay, and then oh, oops, it didn't work. You get what I mean? Okay, earlier CPI day ranges. We could do that, although it would be hard to I mean, we could certainly do it by hand for like the last year, right? But I don't have something that gives me like all of the days that are the CPI days. I need a little bit of API support. Okay. Let's come over here to Forex Factory. And I'm going to change it to this month. Apply settings. Filter, none. Inflation, apply filter. And then we had CPI was August 10th. Drawing tools. We're just going to do a horizontal line. So it was 810. Triangles, horizontal line. Oops. Horizontal line F6. Okay. Right here. And previous month, July 13th. 7/13. What was it? I thought it was F7. F6. There we go. Okay. Oh, the reason it wasn't doing it is because it wasn't on the chart. June 10th. Actually, you know what? We need to change this. This is wrong. I'm gonna redo it. All right. I know I just spent all that time, but what we really need is not a full horizontal line. We need like a horizontal ray, I think is what it is. July 13th, was it? Yeah, there we go. That's better. And August was August 10th. We're gonna get somewhere with this, I promise. I promise. Stick with me here, folks. All right. June 10th was this day right here. That one was really ugly. Okay. May 11th. Should we do April 12th? Oh, that was a pretty wide range too. don't know if we need to do. Well, yes, we do. We'll do all the way to the end of the year. Okay. March 10th. Probably okay. And I don't know if this one is going to be too useful, to be honest with you, but. February was 10th. Oops. That was not what I wanted. I needed. Don't want an event. I wanted a horizontal ray. And lastly, January, right? January 12th. Would it hurt to pay attention to order flow down here? Yeah. Well, but would it hurt to pay attention to order flow at every price? This CPI in January was the smallest range of them all. Okay. So yeah, I have a hard time countering that one. No, okay, so let's think this through. Okay, so now I've got them all marked, and let's just say, shall we say that like once a new CPI comes through, the old one doesn't matter anymore? Well, maybe I should have made them horizontal ones that come through here. But so let's come through any day that we say that it gets above the high of the CPI or below the low of the CPI, we're going to take a trade. Okay, so if we do that here on this day, it closed here and it did go above it, but we wouldn't have made anything on it. Here it did come down, but it closed up here somewhere. Oh, we might have to explode this out. Will it show me here on the volume profile? No. It's too hard to do it. I have to add in a different data series. Okay. I don't think I have to load 1,000 days, but I think I do have to load at least 100 and, well, more than 180, 200 days, let's say. Okay. Ugh. Data series. Make that transparent. Make this one transparent. And this daily one, we need to use the multi-period candle. Down bars will be orange. This is ending up being like way too much work. Orange. Dodger blue, sure. Okay. Okay. Now we want this other data series down here to just be super neat. Now, why is that not FO? Maybe it's the moving average that's doing it. Yeah, it's the moving average that's doing it. Okay. Okay. Hey, now the time period that it goes back to, that's not too bad. So now we're going back to January 12th. We're gonna have to start from February, I guess, because of this data only goes back to there. No, we're just gonna change the data series to be 250 days instead of 200. Thanks. Second leg came down. Yeah, it did. Oh, and they bust, man. Well, I was like really engrossed in that because they really dropped. They waited for me to stop paying attention. But you know what? I wasn't going to take it after the equities open. No way. Fuck. I feel dumb right now. They were giving us 283 at 1.2. Can you believe that? No, I'm not going to do it now. I should keep the thing over here though, so we got the stuff recorded while I'm trying to figure this out. Right? August 10th. So can I go like here to here? Is it properties? No, I don't think that that's what I want. I think I want one that's like stays horizontal but has two sides to it. You didn't trade it, so you don't care. Yeah, for a yield spread, I'd just use a 1-to-1, Jacob. I'm on one side I'm frustrated, but on the other side it was like I wasn't going to trade it. Like I said that I'm not sure, right? Clearly though, my initial impression was right. What is the trigger of an entry? There is no trigger of an entry. The only thing that we know from order flow that gives us a probable entry is market making strategies, wherein there are certain situations where you can catch the edge, or you can sneak in with an iceberg order, or you can find situations where they're out of line with the correlated assets. Those are the only like straight, like here is a set technical order conditions that you have, right? Everything else that we know about order flow that is proven is just telling us like what the order flow conditions are, right? They've formed some sort of a liquidity hole. They might be, it's probably not the best time for me to take another trade. I'm trying to decide how mad I want to be about it. I don't think I'm actually that mad, so I wasn't gonna trade it. I might have like gotten, what's the word? I might have FOMO'd into something, but no. Okay, so I'm just going to do it. I'm gonna have to come into my drawing tools and turn off the snap mode. I'll snap it to bar, but this is gonna have to be line drawing tools, line F2. Right. Okay. So from August 10th to July, so July 13th to August 10th. Take it out in your barbell. It's fine. I really wasn't gonna trade it. I was only doing this because I was frustrated and I had given up on it. I said I don't know what's gonna happen, so I'm gonna distract myself with something else. I wish I had kept watching it and watched it happen, but I'm not mad that I didn't trade it. So like if I do it on this one, so like I could have traded so you could have gone long right here. That would have been a great trade, right? But then it's going to pop through this line on this one and you're going to lose money on this one. Would have made more on this one than the loss on this one, but okay. Here on these ones, kind of gets a little bit more complicated because like here you got the previous day. It's it closed below it, so you lost money on that one, right? And then here on it today, you would have gotten some favorable excursion, but you would be losing on it on that one, right? They are biblical. They are what? Hold up. Isn't that the whole effing point, though? Is that it's a very specific level that you can look at for a very specific reason, and you can set up a trade very specifically based off of a breach or whatever of that particular line. So, like, this is the thing that pisses me off about technical analysis, is that all of the reasons that they say that you should trade technical analysis, when you show why those aren't really reasons to take a trade, they say, well, but it's not really like that. It's like, oh, okay, so technical analysis is good because it's technical and it's gives you set rules to follow, but then you don't actually follow the set rules. It only matters sometimes when I feel like it matters. Like, it just doesn't. I mean, the point is that if you were to take those prices and you were to buy when it got below the previous CPI's low and sell when it got above the previous CPI's high, you would lose money, right? I don't understand what you're saying now. Do I wait for either of those two prices to show up, or can I trade between those two prices every day? Still going. Man, that was a $50 trade too on the second leg. It's a reference. Well, okay, using prices as a reference point is great, but when I use a reference point, I'm only just saying, like, this is how strong of a move it is, right? But I guess in the end, the price action kind of proved what I'm saying correct, though, right? Is that if somebody came in and they had 20,000 contracts to sell, they don't give a shit what the previous CPI low was. All they care about is the price that they have to get their average above in order to make money, right? And the thing is that is something that you could trade if you know that a second leg of a meta order was coming through. We suspected it, but we didn't know enough to know that I should take it. And I was sitting there saying, well, maybe I could take it. But the time at which it started was not a time that I like to take a trade. So it wouldn't have been a trade for me. But it's still, here's the thing. Here, I'm going to try this one more way, okay? The square root law of meta order impact is a law. If you take any data set, of course, we don't get enough information to do these calculations, but if you went to any bank and you looked at every time that they executed a large meta order, okay, and then you did all of the calculations, it will always come out that the impact of their orders follows a square root law. It is a law, and it has been proven study after study after study. It happens every time, right? And these firms use those liquidity holes to execute into, right? And you can see it happen when we're in a downtrend. It goes down. There's a hole that is formed. They get stuck in that price. They pull back maybe a little bit, and then once the liquidity has recovered, another leg, and it's like clockwork, right? And this way of doing things, or this way of looking at the markets, it always applies. Now, the problem is that it's not predictive. It's not trying to make a prediction per se. If you know that a meta order is coming, then you can make the prediction, right? But it's only saying what's going to happen if a meta order comes through. This is the impact that it's going to have on the market. But it's something consistent that you can always go based off of, right? Why are we wasting our times with like looking at like previous? I mean, I think it's interesting. I don't think that you're doing yourself any harm, but like it just seems like it's kind of like a waste of time most of the time, right? Because those price levels in the end don't actually provide an edge to you. $288 doesn't look too bad to me either. It's really hard for me to see it move and not want to do something, but I do need to accept that I would not have wanted to execute around the equity open like that. That one usually doesn't work out for me very well. Now the S&P 500 is on the upside here, so I don't know. Edge gives you an advantage over somebody else, right? I don't know. The thing is that edge can be a very amorphous thing, right? Like I can say that understanding the square root law of meta order impact is an edge. It's something that most traders don't know, and it is an proven empirical behavior of markets that can benefit you at times. But it doesn't necessarily give you a set trade. Like X is going to sell to 20,000 contracts today, right? That's like an edge that gives you a direct trade. Or there's a piece of information that you know about how a certain strategy works that will cause selling or whatever the deal is, right? But that's where it's kind of like, what is technical analysis and what do you use and stuff? Because to me, technical analysis is you see a price pattern and then that gives you certain setups, right? And I'm just my whole thing that I'm trying to prove to you guys is that doesn't work. Like it's a net loser in the long run. But can you incorporate information about current conditions into your trades to make you more or less likely to want to follow a piece of information that you might have that suggests a trade? Yes, you can. And so that's technicals. That's technicals to me. Technicals to me would be anything that's not fundamental information. So anything that's market generated. So we can, but the technicals that I'm using are very different from what your typical technical analysis guy is using, right? The technicals that I'm using are, what are the liquidity conditions? And the liquidity conditions really has to do with, I would split that into like four parts. It's like, what are the limit orders? What are the market orders? And what are the limit orders that are canceling doing? Or those three forces and, 6 forces when you combine buys and sells kind of come together. And then the other thing is like, how much range is it actually causing in the instrument, right? That I want to watch. And those two things can kind of help me determine when I do or don't want to take trades. Right. And ultimately decisions are made on the DOM. Well, and like, again, I don't typically take trades purely off of the DOM. Like the thing is that I do have setups based purely off of what I'm seeing on the DOM. It's just that I know that those setups on their own aren't enough of an edge to get me anywhere, right? Because it's just too competitive, right? If I always knew that I was going to be at the front of the queue, then I would do those, and that's all I would do. If I had some special jump in the front of the line sort of a thing, then I would have these certain situations where I would just 100% always take it and try and get the one tick out, whatever, right? But instead, what I'm doing is I have the bigger trade that's based on speculation, and I use those smaller edges to determine when and how I enter, right? If I felt really strongly that there was going to be an opposing meta order that came through that was going to buy us up to the highs, you know, and there was an iceberg down here at 05, I'd be like, hell yeah, let's do it. Buy it. Sure. Right? But the technicals aren't giving me the trade or the entry. It's just helping me refine my entry, right? Or here in this situation, for me to know that if I want to sell it again, and hey, I wouldn't count out a third leg with the way that it's been going, right? The way that it's going, I think that they might have to do that a bunch of times depending on how many contracts they want to sell. But I can use the technicals to say, well, I don't want to take it at this point because the liquidity hole is formed. Maybe I could take it at 07. Right? Huge spike in longs, delta on the ZN just now. They're thinking low is in. Now that interests me because last time that you put something in on that and you showed me the chart afterwards, that did end up making a difference. Like somebody put on a big bet there at that point, and that ended up being the high of the day. S&P 500 breakout set and keep bulls, or falls breaks out on bears again? What do you think? I'm a little bit concerned about how much further up the S&P 500 can actually go, because I can see a lot of reasons based on anticipated flows for the S&P 500 to continue to move up. But if the S&P 500 is to continue to move up, that's going to put more pressure on interest rates, and then the interest rates turn around and hurt the equities. So that kind of scenario can't keep going on forever. Did the spreads give any heads up to the sell-off? Actually, maybe in this case. So this is a little weird. I didn't notice that until you just said something, but there was some steepening. So this initial move was a little bit of a flattener. Let's look at it in the knob. This initial move was, you know, there was maybe a little bit of flattening, right? A little bit of flattening, but then ever since the pullback, it's been steepener all the way. So that one would have been hard to have called like as it was happening though, right? So, do you think that they'll cross the divide back up to 11, or do you think that this is as high as they can get in the 10-year? Yeah, I think D, that what you're seeing, yeah, I can see it. I won't show it on the screen since it's, you know, private data, but he's just showing that there was a bunch of bids added on in the futures on a stock. Oh, thanks for stopping by, Uzi. I always enjoy it. Don't feel bad like that you screwed a trade up for me or anything. If anything, you probably saved me from something, so. Looks like they're gonna go for the cross, which wouldn't be too bad. 12 might make sense. So the thing that we could have done is when they came back to 12, I could have sold it. But that would have maybe only given me still, maybe it could have been 20 bucks. Probably would have been worth it. You know what? With the way that that played out in the treasury, I kind of wonder if there was somebody bottom fishing down there at 119.10 or so that had to puke when 12 was breached, because when 12 was breached, it came back through fast, and I wish I had been seeing the order flow as it was happening. That's the thing that I'm most mad about, is that I was looking over here instead of here, but because I would have liked to have seen the stop run, but oh well. I think though that off of that one that I should probably change something. Like I have in the past done this thing where, you know, I will totally go off onto a rant because I don't want to trade. But I don't think that I ever want to get myself stuck on a chart unless I'm really, really confident that nothing's going to happen. And then that was a situation where I really shouldn't have been looking over the chart. I could have kept talking about it and we could have kept watching it, right? So that's what I'll do differently next time. So there has been some trade here in the 5-year. It's kind of giving me this sneaking feeling that there could be a other people took that trade. See, there's some retail traders taking it at 2.865 because the price is the chart is kind of turned down just a little tad, so they all think that then the next leg is coming. I'm a little wary about it still. The 5-year definitely did kind of start to make it look like it was turning back down again, but it's too early. Your volume is so low. The volume in the 10-year is relatively low. So like the net amount of movement here has still only been 15,000 contracts, right? 5, 10, 15, yep. Net 15,000 contracts sell on the day, which is relatively low. I think that one of the things that's going on here is that this meta order that they're executing today is not necessarily a massive one, but the liquidity conditions are just rough, right? And the block traders that are executing this thing are pretty aggressive, right? When it comes in, they're pretty aggressive, probably because they know that they have to take the liquidity when it's there. which I guess gives us good potential trades, but there's still a lot of trade happening here at 865, 866 in the micros. Eight 6.5 wouldn't have been a bad pick. I'm still a little suspicious of it for some reason. I'm gonna change the music. Five ticks, not bad. Zero Hedge is the most bearish news source I've ever. I'm right. Like the funny thing is that I don't really like their analysis, like, ever. Their analysis is almost always wrong. From what I've seen, like their take on the current on like what the current state of the market is, they always find some way to turn it negative. And I think that the site does seem to have like this political tilt to it, like that they're trying to fight against the financial establishment of sorts, right? But it seems to me like that the bend that they take is to increase their viewership, right? The more bearish they are, the more scared they can get people about what's going to happen to the economy, the more likely they are to visit the website, sort of a thing. I don't like this turn down. It's too soon. Smooth jazz with Seth. I know. I went to lo-fi and we got like a straight up jazz song. You know what makes me mad is that I maybe I shouldn't have taken that trade or not, but this move is a really, really strong, solid example of how large block traders utilize the square root law of meta order impact to execute their orders more efficiently. And we probably could have made a really good call. I mean, I wasn't going to say, yeah, they're going to make a new low, but I could have been sitting there saying to you guys the whole time, well, let's just see if like another leg comes in. It's possible another, I don't know, but if it comes, it probably will get new lows. And then when we watched it and we see all the stops and everything, it would have made like so much more sense to a new trader that like, oh yeah, it does do that. There is something to it. Yeah, you can't predict it unless you know something else. You can't predict it just from the technicals, but it does happen. It is like a very consistent technical behavior in the markets, and probably a lot of the chart patterns and like patterns that people think that they see are really probably just variations of the square root law of meta order impact coming into play, right? And so I was so focused on trying to teach the lesson of why specific price levels aren't necessarily very useful, that I really missed the better lesson, you know? Zero Hedge is run by a Bulgarian? Is it really? I always thought that it was a guy in the US that used to trade for JP Morgan. Like, I don't think that there's anything is really known about the writer of it per se, but from the way that he talks about the firms, I think that he worked for JP Morgan. But I also, they kind of, man, they do say stuff though that like anybody that worked in the financial industry would know better. Like for instance, complaining that they front run their own research. That's not true. Like the way that it's trading right here, it really makes me want to go short, but I think that the timing of it and everything, that we should be a little bit suspicious of it. In fact, I'm actually kind of wondering if there's not worth taking a short in the micro. Okay, so there's a little bit of a spoof there at 05.5. That's I'm gonna add that to the stack of suspicious, right? It looks like on this latest pullback, there was a lot of options activity in it, wasn't there? Like that continuation really caught the larger market's attention. By the way, you know, there was another thing that I said earlier that ended up being a really effective thing, was I said, well, the Japanese yen did move down after that initial move, but then it's kind of been coming back up, and it was like, well, maybe that means it's going to reverse or something. And I was saying, well, the dollar is getting weak compared to the euro right now, and so what you're seeing in the Japanese yen might not track the futures, the treasury futures as well as it normally would, because it looks like there's some other currency related flows going on. And that was true. The treasuries hit new lows, but the Japanese yen did not. They got jammed on ZB around 10. Well, I'm a little worried that they's gonna puke here, man. Like when you say that, that makes me think, okay, so a large speculator is taking a long position here. Is that actually going to be enough to make it reverse? I think probably not if there's more legs to this, but the selling that we saw to bring us back down to the lows here does not look like another leg of a meta order. It's happening too soon. I think that we're probably still stuck in a liquidity hole, and I could have taken 6.5 and been taking the profit of $15 right now, but I did not. I kind of held out for more and it didn't happen. One of the issues is like, you know, remember earlier I was like 283. When it came back to 283, I probably should have just taken that, man. That would have been a perfectly fine trade. So while I'm thinking about it, if you guys haven't watched the video that we put out yesterday about Federal Reserve, especially if you're newer, you know, make sure you go watch the video. When you go watch the video, give the video a like and put a comment on the video. Like, it really helps the channel out. And right now there's only one comment on the video and they're kind of being stupid. So like, I would really, really appreciate some better comments on that video. Like seriously, because it just pains me to see that such a stupid comment as the one comment. I really wonder though. Oh, by the way, can I see now? I come in here. Do people not like the thumbnail? Maybe that thumbnail is just too polarizing or something. Because yeah, it is. The impression click-through rate is not very good. Why is that? Why is that? What is it about that? How to trade the Federal Reserve that people don't want to click on that? I thought that would be one of my best. I am really surprised by this. I thought that this would be one of my best performing thumbnails, and it's not. It's one of my worst performing thumbnails. What's wrong with it? The title, How to Trade Federal Reserve Policy? What's wrong with that? Is it because anybody that's on YouTube that is searching for or is marked as interested in the term Federal Reserve is only interested in it because they hate the Federal Reserve and ergo doesn't want to try and trade it? Randy says he likes the thumbnail. Thanks. I thought it was funny. Okay. I'm keeping it that way because I like it. And you know what? If the people don't want the treasures of the knowledge that I put in that video, because I think that that's a really good primer for if you've never traded before and you don't really understand how the news cycle with the Federal Reserve really works, then that's a lot of really good information in that video. So I'm gonna keep it, and the people that find it, they find it, and good for them. But man, YouTube is so frustrating sometimes. You know, it's kind of a similar thing. Like I got the video, like my full guide to trading the news. I kind of had similar problems. Like it's done better over time, but the initial viewership on that video wasn't very good either. Maybe it's just because it didn't have a picture of me on it. I don't know. Kind of started to turn back up a little bit and they fell back to the bottom. There you go. Probably because your previous videos on a related topic didn't call the Fed a blood-sucking vampire that works for the global elite to oppress the people. I'm not on a trade. I was thinking about taking a trade around 28.6 half. I saw too many people trading there and I kind of was like, I don't know if I like that one. I kind of thought maybe I would get 286 and it didn't, so I just kind of, but I'm even here at the low, I'm sitting here like, okay, so is this like the next leg? Probably not. It looks like this is just, there's a hole here at 05, so it was too early. Like around this time is when I would expect to see like another leg, but it's like it's so low and I'm not really getting the kind of order flow that I would expect to see for that. So I think that if there was somebody trying to execute something like that, they would probably continue to wait. Boring. Yeah. The S&P 500 has been like, what the heck? I haven't seen a chart that choppy in ES in a long time, man. What's the deal with that one? Not fun, I bet. In fact, I bet you if I go to Twitter, there's going to be something from Futures Trader about how this is terrible action. This is typically when he would come in and say something like that, because it is really crappy for any kind of technical trader. Nope. They just turned. Well, I wouldn't expect to see the order flow over there necessarily directly affect the treasuries. Yeah. You say that the put longs, they getting jammed. Huh. There's 06. Yeah, that's what I was worried about. So I continue to be. I think the issue I'm seeing, or not the issue, but it seems to me like when I'm watching, I'm pretty on the ball today. Yeah, I just haven't been taking it. Trading 1,000,000% direct correlation. Well, the problem that I would or how I phrase this, the thing that I would consider is who is trading that instrument and who is trading this instrument, right? So there's going to be different groups of traders. And I think that, well, maybe the person that's trading the meta order, it could be in a correlated asset and it's not actually here. But, you know, if there's a large meta order going one way, like that's going to be the person that's ultimately going to be in control. I suspect that they're doing it primarily on the futures, but I could be wrong. Sent me current spike. Is that the spike down that I see there, that line? So is that like a bunch of buyers like bailing there? And there's 07. I'm a little tempted to take it short, but I don't think that one makes sense. The most likely thing is that they settle somewhere around 06 here. Yellow line moving down is a bunch of put buys. Oh, that's interesting. And it turned like right on him. Look at that, 08. Pretty aggressive. Offers not really there. Here's 865 again. I still don't like it, but I could see, let's just say maybe we could take it here. Yeah, they got screwed, didn't they? Like I said, who's trading this instrument and who's trading that instrument, right? It seems to me like the people that are trading that instrument, like one of the things, so think about it like this. Think about it like this, okay? I'm a block trader. How do I execute? I use Omgren Chris. I sell hard until I create a liquidity hole. I jam as many orders into that liquidity hole as I can, and kind of dwindle that as time goes on so that the liquidity recovers. And then about 45 minutes later, when it has recovered, I do it again and I jam them down and I stick as many orders into that as possible, right? And so the orders are going to be, you should be able to see that as it comes down, where it's like there's going to be a big spike as the liquidity hole is created, but then you're really going to see a lot of orders put into that liquidity hole. Okay, But what happened here was not really that, right? It was like, okay, we had that move down, we had the big jam in the liquidity hole. Now we're kind of ranging around in the hole, came back to the lows. All of a sudden, as it's approached the lows, after it's approached the lows, then we see a big spike in options playing, right? Is that a block trader that is gonna, have lots of orders and really consistently push the market? No, that's a speculator, right? That's somebody that, it's at the low of the day, they want to take the low or whatever the deal is, right? So, and it does not surprise me that he got screwed there. Right? Like, I can just kind of tell based on when they agreed, when they traded it, what kind of player it is. And it's not the player that I'm trying to follow. Well, S&P 500 is falling out the bottom here. Is we actually going to have something interesting happen in the S&P 500 now? It's not too ugly yet, but there was definitely some selling there. You say hopefully, Oliver. Oh man. Hearing you guys say stuff like responding like that makes me really concerned for my 401k. Like, if the market decides to take another downturn, people are just gonna go ham with it again. Like, I really think when we were selling in, like, what was it, July was some of the worst of the selling, or was it more June? I don't remember anymore. I was just looking at a chart of it and I don't even remember now. No, it was like June. It was the beginning of June was the worst of it. Okay, so let's say April, May, and June. Okay. I really think that they were going overboard with some of that. Every time that it was going, I was like, this is too much. It's not that bad. We not follow them, we watch what the house doing to them go with the house. Haha, no, I meant hopefully some action, not necessarily selling. Oh, action. Okay. I don't know, man. I mean, look at this chart, dude. You hear the whole thing yesterday about Michael Berry, like, sold his whole portfolio. He doesn't hold anything right now. He says, well, this is in line with a bear market rally. Well, yeah, the degree of it is in line with the bear market rally, but you don't actually know. Like, there's it seems to me that the thing that he's using, I mean, he's not being explicit about how he's determining that, but it kind of looks to me like the determination he's made is we're in a bear market and therefore I'm going to sell any rally. I don't think that that's good enough to make that kind of a move in your portfolio. You know what I mean? But I mean, I kind of see what he's saying, because, like, that's a pretty insane rally. It kind of looks a little overdone. I don't think that they're going to be able to keep that up past the options expiration. There's going to be at least a pullback to the what would it be, the 100-day moving average, probably is what I'm thinking. I mean, it looks attractive for a short. I don't think that that's any of what I just said there. It has any kind of real positive expectancy, like that I could predict that correctly more often than not. That's just what it looks like to me, and I'm betting that almost every other person in the market is looking at it and seeing the same thing. I don't even, it's kind of weird the way that I read charts now, because I don't look at it and be like, okay, well, here's this technical this and technical this, and that means that this is. I just look at it and say, that looks like it's moving up. That looks correct. That looks good. It's like your mind sees the pattern whether you want to or not. And I'm kind of starting to wonder if the pattern that my mind sees is something that brains just want to see. Which is to say, like, okay, so we say higher highs, higher lows, and here's the things that you learn about technical analysis. And if we were to say that it was just arbitrary, but we learned that, and so that's what ends up happening is, you know, because of what people have learned or what has been taught about technical analysis. But what I'm saying is I'm starting to think that humans see something in the chart that our brain concocts naturally on its own, and that if you took somebody that grew up in a completely different culture, they never heard of anything of the stock market or anything like that, and you taught them to start trading and everything, you didn't tell them anything, but they just started looking at charts and had to figure out their own form of technical analysis, I think that they would see the chart the same way. Do you think so? I don't know how I would prove that other than that kind of experiment, which I'm not sure would be ethical, but you know, that just everything that I've seen about the market has kind of been like the humans do things because they want to do it that way, and there's not actually anything backing it up. It's like what you're seeing in the chart is actually something that your brain that has been ingrained into your brain from thousands of years of evolution in hunting. Oh man, so I'll tell you this funny thing. I was on TikTok and there was this guy talking about it. I think it was a theory, but he talked about it like, oh yes, this is like, we know that this was a thing. But he said that there used to be a dinosaur that would hunt humans. And the way that the dinosaur would do it is he would smell their feet. He could smell our feet. And so humans over time developed the instinct to cover their feet when they sleep. And they said that if you breathe hot air on somebody's foot, it will scare them awake and they'll be absolutely terrified. And I was like, well, it does kind of seem like I have a desire to hide, you know, I want because I get hot and a lot, especially since sometimes I'll take niacin before bed. So like I can feel the blood in my hands and my feet, and like my feet are radiating heat out, and it's hard to cool down enough to like want to fall asleep. So I will stick my foot off of the side of the bed so that I can cool off, right? But I don't want to do that. I want to keep them covered even though it's like hot. What's with that, right? And so I'm like, maybe there's something to this theory. I don't know where this guy got this from, or if there's a study. You know what? I'm at a computer. Let's search for this. But anyways, it's just like there are these things ingrained into our minds. We're born with. The evolution of anxiety. Carnivorous kangaroos, what? I don't know where this guy got this idea from. I think he might have been full of shit because I'm not finding anything when I'm searching for it. If you watch the show Primal, no. I've actually never heard of that one. You know what? I think that they might sell it later today, but it's it's too late to even do anything about it. So it sucks that I didn't take any trades today. I could have made some money. Oh, Seth. I'll learn my lesson. Don't let me go off the rails like that. Next time I'm doing that, you say focus. Say focus, and if I'm getting too far off and we need to be paying it, you tell me to focus. I need people to tell me that. I probably would be a better trader if my wife was sitting here and yelling at me and be like, no, focus, Seth. You gotta focus now. Tomorrow is FOMC minutes, might be a sleeper. The day action might be, those minutes are probably going to be interesting though. ELT says, I think that is just the next leg of last week's dump. When we come in here to the charts and everything, I mean, somebody did sell. There was a large meta order sell in here. The market has kind of been going at points. Like the thing is especially on this move right here, lots of people bailing. Like it seems like that through this whole period here, there was people that were saying, we're going to fight the Fed. And then the Fed came out and like, actually goodish. Actually goodish, right? And I think the Fed didn't say anything today, I don't think. But somebody's selling it. I kind of have to wonder if that was not somebody bailing on like a long position or something like that. It wouldn't surprise me. But it could be anything. It could, like I said, there could be no real rhyme or reason to it. It could just be some large player having to do some rebalancing and stuff. So kind of sucks that we don't know the real reason for it. But once we feel confident that a large meta order is coming through, we can predict how it's going to play out really, really well. And even here on this last leg, you know, well, I said now it's coming up too early. So when it came down, didn't make new lows, bounce back up. So it didn't follow the pattern. It didn't follow the way that I would expect a block trader to trade it. So I ignored it. No idea where I read it, but didn't the first primate appear like 10 to 15 million years after the dinosaurs all turned into birds? Oh, I don't know. I don't know. Instinct to cover feet. I search for that. It doesn't show up. I don't know where this guy got this from. Raid the Rave by Burke S. Okay. Sure. I'm not super into this particular lo-fi track. Doesn't look like they have it on the YouTube yet, so I'll have to listen to it on SoundCloud. Whoa. That was loud. Hold on a second. Good rumble. I'd say it's pretty good as far as hard techno goes, but there's not anything particularly special about the song. I would still play it in a set if I was doing hard techno. I never DJ'd with hard techno before, but just because it wasn't the thing. But I kind of wonder if now I wouldn't work it if I could get it to work at a small party now. Or if they were doing techno here in Salt Lake, I don't know if they still do that, but I would do it and play hard techno because I got some good stuff that I've saved up over the decade. It just came up in your playlist and you thought I should mention it. Yeah, it is that. There's do they still have it? There's another 2 ticks down there, and so here again, like here's something that I notice happens. Okay, like can you see my chart? My chart's down at the bottom. Is like as soon as there's an inflection, that is to say, like they're going up, and then as soon as I've got a bar where like this bar is clearly closing below this bar, so like that's the breach below 07.5, like that's the first point at which you can see that it's kind of turning down. And that's often where if I was like looking for a trade, I might try taking. If I thought that we were going to go lower, it's like, okay, here's the place to take it. But like over time, I've realized like it seems like that all of the speculators and the retail traders do that. And you could almost kind of paint the tape if you were trying to get a bunch of people to sell. That's all you got to do is just like pull your bids, let it go down to there, and then watch everybody sell it. So when I see those, I'm a little bit more cautious, especially when I see those and it's not in the time period that I expect. Oh, they have changed it. Oh, no, but they still have it. Beatport is the place, my friends. Hard techno. Yeah. This track is very similar to the one that you just sent me. Anyways. See, just pulled right back up to it. So here's a thought. Like when it gets back, you don't know about Beatport? Holy crap, dude. No. If you listen to electronic dance music, Beatport is the place. Okay, so what's special about Beatport? There was a number of online music depots of this sort when things started out, but Beatport just ended up having like the best interface and the best community behind it and whatnot. And anyways, Beatport is the source for electronic dance music tracks. And if you are a DJ, there is a 90% chance that the EDM tracks that you download off of Beatport. So you come in, you buy them per song. It's like $1.29 per song. You can get like the full quality waves if you want. And yeah. And it's all electronic dance music. So they got it all split up by genres. So you can come in here. So what you were listening to is what I would consider hard techno. So you can come in and, oh, look, see, my Ben Nicky and Michael Katana did a track together. That's cool. That one's really fast. That's 140 BPM. And see, you can see right here, it lists it. It was 140 BPM in B minor. So as a DJ, you can even come in and kind of see like if it's going to match your track, or I think you can even do searches and like search for specific BPMs and stuff. And what I would do when I was I'm not in on my schedule as well anymore. I didn't know Stoneface and Terminal had a top track. I love these guys. Is what I would come in and do is just if I come into releases here, I think it is, or maybe I have to view tracks. I don't know which tab it is. No, I think that you want to use tracks. Yeah, there you go. So if I come in here by tracks, this is every track ever released on sorted by release date. So I would literally come in and listen to every track released that week. Now you kind of have to filter it yourself a little bit, because what you'll see is like, okay, so this one, limit, extended mix, and radio edit. Okay, so that one's like an individual release. It's from a label that I've never heard of before, but cool. That I like to listen to those ones. I want to find the small ones that, you know, might be nobody else has heard of before, right? But then you might get these other ones. So like this one right here, this looks like a compilation album, right? Because it's different artists, one label, but all different artists on one CD. So it is probably the case that this track right here was released previously, right? So I kind of ignored those ones. And that's kind of how you have to sort it out, because things will like get re-released and stuff like that, right? And you can follow individual artists and individual record labels too, so you can come in, you go to Might Be Port and watch them. Anyways, that's basically how you do it if you want to DJ. Is you've got to do the crate digging. And so it takes it usually take me about an hour to go through and just filter through everything that was released that week. But it got a lot harder, because it used to be that like everything would get released on Tuesday. But like that's the way that distributions used to work. And sometime around like sometime around 2016, it changed, and all of a sudden people were just releasing things whenever they wanted. And so it wasn't like everything got released on Tuesday. That made it a little bit harder to keep on top of. Anyways, Beatport's freaking awesome. They tried doing a streaming thing, but I don't know if it really went too well. All right, well. Just kind of come in here and do a final little rundown of what we had happen. So we did get another leg. Ooh. I mean, you can really see it really well. Leg 1, leg 2 was a doozy. It sucks that we missed it. But when it came up to here, I basically gave up. I said, I'm going to do something else. Well, I shouldn't have done something else. Should have watched it, but I don't think I would have traded it. Now we're getting this stuff. This I don't think is like another leg. I think that these are people trying to trade it now. So we'll see what happens. I think that maybe later in the day, maybe after the European markets close, maybe then another leg. We'll see. When you come over here, the dollar, though, I think is the one that seems to be the most extreme. The dollar just got hammered there, right? Dollar got sold off to this morning. Most of the other things like the 6J kind of sideways. Gold at first was looking really bad, but then recovered and did not follow the treasuries lower. S&P 500 did get a decent sell, but it's come right back into the range. So they're still kind of chop city over there. And what else are they on my watch list here? Is there any like significant movers? Oh, well, corn. Apparently corn is down pretty big. Oh, yeah, well, I can see it there on the chart. It just didn't stick out to me as that bad of a move, but apparently corn and soybeans are going down. I guess that's a good thing, though, because crops have all been expensive, so. You know what? When the summer is over, when September comes, I really need to focus, and I should start practicing a little bit better now, so. Today, I'm going to put in here, I get a little distracted. Kind of clickbaity, but you know what? I don't think that many people click those for that reason. So, well, guys, it is time for me to get going, but I will see you tomorrow. I don't know, like based on that we had this and it's a Wednesday, I don't know if the early morning, the thing is that I actually think that Wednesday would be an okay day to execute, but if not for the FOMC minutes. So the FOMC minutes are probably going to be a big deal tomorrow. It might be a quiet morning otherwise. And then Thursday and Friday, it'll just be all options. So, but we can actually get some trades off of that sort of a thing. I don't know if we get too many good opportunities in the treasuries, but probably in the equities, you're going to might get some opportunities. Although the opportunities might just be scalping the range like it has this morning. So, yeah, we'll see. Stay profitable, friends, or at least don't lose it all. If we didn't take a trade today, that's fine.